Let me open the topic first. Today's topic is deferred revenue. Let me open the topic first. Okay. What is deferred revenue? Deferred revenue is, let me add the people. So deferred revenue is in a prepaid business mostly. We receive three kind of payments, or generally three kind of transactions are recorded. One is the installation or one-time fee. The other one is a recurring fee, and the third one is the usage-based fee. Now, out of these three fees, the recurring fees are collected in advance. That means, say you recharge your mobile or recharge your Wi-Fi or pay for OTT subscription for a year. Okay, say you pay for Netflix subscription or you pay for LinkedIn premium membership for 1 year. Now, this entire the payment that you make for the entire year, this payment the company cannot recognize uh, in the month one itself. So you are paid for 12 months in the month one. Now the company cannot recognize the entire amount of revenue. It has to recognize, say you have paid for January on January till December. So on January, company can recognize only January months of invoice. I mean January, the revenue of the January, and for the next 11 month it has to defer. Then again on February it will recognize a period 2. Then 10 months will be deferred. On March it will recognize period 3, and 9 months will be deferred. On April it will recognize period 4, and 8 months will be deferred. This is a scenario. Okay, this is the accounting standard. There is an accounting standard in India. We have accounting standard 9, where the revenue recognition says that the revenue, even if you receive for advance, but you cannot recognize the revenue on day one itself. Slowly you have to recognize the revenue. Okay, so it is similar to RAR, but in a easier, in a lighter version, RAR light. If you don't want to activate RAR, basically RAR is needed if you are in, mostly if you are in US, that is IFRS 15 has to be followed. But if you are not in US and you're not following IFRS 15, then you can go ahead with the deferred revenue concept. So what is deferred revenue? um, Print Service Corporation has a customer who pays an annual fee for printing services. The billable item class has the deferred revenue interface component. We'll see that the deferred revenue interface component has to be activated. The order management service delivers the deferred revenue, and this invoicing function def underscore revenues has to be activated. Okay, so here is the example. If I zoom it, how do I zoom? Okay, there is a plus button. So here you see bits are received and they are built together. Okay, so bit then bit deferred. Bit deferred means future bits. Okay, future times bit also received. All of them are built together, then they are invoiced together. So invoice of $120, 120 means $10 for each month. Okay, here in the FICA document, $120 worth of invoice is posted. Now after it is posted in FIGL, the deferred revenue will be recorded. How much it will be recorded? So period 0101, that is for January, $10 is recorded. Then from period 0102, the rest 10 will be deferred. Okay, that is future period. It will be deferred for future period. This is called deferred revenue. Revenues that have not yet been realized are posted on a separate revenue account. Not have been realized means, say, I have received revenue for 12 months, but only for the revenue for the month of January is realized. Realized means I have the right to recognize the revenue for the period of January. From the period of February to December, once my system date goes to February, then I can recognize the February period. But the future dated revenue I cannot recognize, so I will record the revenue in a different GL account. Okay. From here, they are posted to actual revenue account at the time they affect revenue. So initially they will be recorded into a say January month's revenue I'll record in the normal revenue account, and from Feb to December I'll record into a different revenue account. Then when the system date becomes February, then who is joining? Then from here they are posted to the actual revenue account at the time they affect revenue. So when the system date becomes February, I will record it into the month of February. Okay, either at a predefined time or when the services are performed. Okay, so here are the steps: create billable items with a transferred posting
Yeah.
date for.
So sorry to interrupt. So for the future of February, when the new revenue, other revenue account is determined. So once the February is crossed, then will that be replaced with the old revenue account?
Yes, it will be moved to
Okay.
the original revenue account. Okay. So if we are at 28th February, then 2 months of revenue will be posted to the original revenue account, and 10 months of revenue will be posted to a different revenue account, okay, separate revenue account. So the steps are: create billable items with a transferred posting date for delayed revenue. Then, delayed revenue means the future revenues. Create billable items with additional information about the deferred posting date. The deferred revenue interface component is required. So interface I'm going to show you. Post the full amount as an open item. So when I post the accounting customer invoice, then I post the 12 months of revenue. Okay, because customer has to pay 12 months. Create an additional FICA document to transfer revenue to the deferred revenue account. This is a separate revenue account which is called the deferred revenue account that I'm going to show. Make transfer posting from the deferred revenue account with a time trigger to the revenue account. So as the time passes by, when the system date becomes February, I'll pass another month of revenue from deferred revenue to the original revenue. On March, again one another month of worth of revenue from deferred revenue to original revenue. Okay, this is the concept. Now, deferred revenue means time of invoice is not equal to time of revenue realization. Two types of revenue can, two types of revenue deferral can happen. One is time-based deferred revenue. The other one is event-based deferred revenue. Time-based means revenue recognition dates are known, amounts are known. For example, rent for 1 year is to be paid in advance, and revenue are distributed over 12 months. So I have received for 1 year's rent. Now I will enter 1 month of revenue in my revenue account and 12 month of revenue into deferred revenue account. This is time based. Or it can be event based. Event based means revenue recognition dates are unknown, amounts are unknown. Okay, example, purchase of a voucher and redemption in partial amount on various date. So here, for an example, say you are working in a project, you have talked to your client that what is the payment schedule. The payment schedule is, say, event based. Once a blueprint is finalized, they will pay 20% of the money. Okay, so that is not time based. The blueprint may finalize, so we are targeting the blueprint to be finalized by the end of February, but maybe actually blueprint is finalized at the end of April. So April is that particular event where this 20% of the revenue is realized. Then once SIT is done, say 30% is of the money is recognized. Okay, so total 50% happens. Then after the end of UAT, another 30% is received. Then on go live, 15% is received, and after the pre go live support, that is a hypercare, the rest 5% is received. This is called event based deferred revenue. The times are unknown. Okay, whenever you see a project planning, there will be an Excel where they have these arrows like on this time we'll go live, but they may not be met. When as we progress, we may find out that some issues require special handling, OSS has to be raised, some special component has to be activated. So in that case, it is event based deferred revenue. Okay, so here examples are given: time based, event based. That's it. Now here you have to understand the accounting properly. Okay, let me first go through the accounting, how the accounting will happen. Okay, then I'll open the SAP. And again, this one I have to show uh, from a separate system, because this one will require some enhancement. Without that enhancement, this one I cannot show. That's why I'll show you from a separate system. So say I have received revenue for 12 months in one shot. So what will happen? So on month one, on day one, when I post the revenue, say my revenue is um say say my revenue is 240. 240 meaning $20 per month. Okay. So on day one, when I post the customer invoice, my accounting is customer debit revenue credit. Okay. In this revenue, there are two types of revenue. Okay. So in the revenue, say there are two types of revenue. Revenue one is the one time fee, and revenue two is a recurring fee. Okay. This one time fee, I don't have to do the deferral, because one time fee belongs to the first period only. But this revenue I have to do the deferral. So say here one time fee of 10 is received, and the revenue for the 12 months, that is 240, is received. So customers open item is 250. Okay. Understand, this one does not require any distribution during the period, because this is one time revenue. Similarly, consumption does not require distribution also, because consumptions are mostly postpaid. Once the customer consumes, then the company comes to know how much is the consumption. So as long as it is postpaid, there is no need to do this accrual and deferral, because this is billed for the period only. Okay, so no need to do this transferring. Now here what will happen, customer will pay. So first invoice is posted, then the payment will be received. Bank debit, customer credit, 250, 250. Okay, open item is cleared. This one, open item is cleared. Okay, now what happens, this revenue I have to defer over the period of 12 months. Okay, this is 12 month worth of revenue I have received on day one. So what will happen, so I have to run the deferred revenue cycle. Okay, so first cycle, say I am running at the end of first month. Just giving an example, it can be monthly basis, weekly basis, daily basis. Say I'm giving you an example of monthly basis. Say on 31st January 2025, I will run the first deferral cycle. The accounting entry will be revenue debit 240 and deferred revenue credit 240. Okay, so revenue debit means the entire amount of revenue that I recorded, revenue is usually credited. Now I am debiting the revenue. Okay, debiting means I am nullifying the revenue. This is day one's entry. Then also first day there will be two entry. From the next day onwards there will be single entry. Okay, so next, along with that, it will post another entry. The entry will be deferred revenue debit and revenue credit 2020. This will happen on the month end. First cycle's month end, this entry will be posted. Okay. Second cycle's month end will be 28th of February 2025. Here only this entry will happen. Only this entry will be posted. Like that, every month end, this entry will keep on this entry will be posted on every month end. Okay, so at the end of 3 months, let me see how much is deferred and how much is accrued. Okay, accrued means the amount which is realized, which we are eligible to realize, and deferred means which are advance, which is like a liability I have received in advance, but I cannot recognize, that is liability. Okay, so let's see how much revenue is after the period, after 3 months of after we pass 3 months, what is the accrual and what is the deferral. Okay, so I'll just enter a minus sign against the credit ones. Okay, let's see the balance of revenue at the end of 3 months. Okay, so I'm not considering this one because this is one time. This has to belong to a particular first month only. So I'm considering this revenue. So here's a minus 240. Here's a plus 240. Minus 20. Minus 20. Minus 20. See what is the balance? Balance is 60. After 3 months, I told you $20 per month. That means after 3 months, it should be minus 60 only. That is out of 240, 60 is recognized, and rest 180 will be in deferred. Okay, so revenue we have validated, the revenue balance is 60 only. Let's validate the deferral also, deferred balance also. So my deferred balance is, here we have a minus 240 plus 20 plus 20 plus 20. See, revenue balance, deferred revenue, that is advanced revenue balance is 180. So at the end of 3 months, if I mention here Jan, Feb, like that, till December 2020. So 240 we have received, out of which these three are recognized, and these nine are yet to be recognized. Okay, so the items which are yet to be recognized will be transferred to an account called deferred revenue account. This is the separate revenue account that SAP was talking about. Okay, so because this money is not recognized yet because the period is in future. So advanced revenue will lie in a separate account, and the revenue which are realized are going to the original revenue account. And this happens not in one shot, as months pass by. In this case, we have seen that 3 months has passed and 3 months worth of revenue are recognized. And here it will go to the original revenue account, and the rest will lie in a deferred revenue account. Okay. Now I'll pause for questions before I go to the system. Let me know if you understood it.
Yeah, so I have one question. So when it moved to deferred revenue,
Mhm.
mm, I forgot the question actually. No, will that be transferred to FI?
Yes, yes. We'll do the posting here. All this posting will happen in FICA and it will be transferred to FI only. All
Okay,
posting
this
will go
deferred
to FI.
revenue also will be okay. This deferred revenue also will be posted to FI, but it is
Yes.
not actually paid, right? But still, it will be uh,
Payment has taken
transferred to
place
FI.
on day one itself. Payment, see, it doesn't depend on payment. It is about how much revenue am I recognizing. Payment takes
Okay.
later. Payment is clearing the AR. I'm talking about revenue, not AR. Okay.
Okay,
Payment will be
this
separately,
is
tagging and
advanced
all will.
payment. Already advanced
Yes.
payment, is it? Okay.
Advance payment, yes, yes. We book the revenue and then customer pays in advance, then we'll recognize the revenue as time passes by. Okay, light version of RAR. Okay, any other doubt? Okay, all right, let's go to the system and
Is it
understand.
similar to installments?
No. Installment means the customer will pay in different installments, and here customer pays in one shot, but customer pays for different separate future dated revenues also customer is paying in one shot. Installment is just ulta, just the reverse. That is, each month they are paying. Here customer pays in one shot, but the entire revenue the company cannot recognize in one shot. Company has to recognize one by one, and all these transactions will be GL to GL transaction. See, customer is not invoked. Customer is here, customer's recording is done. Then on each month, these are all GL to GL transfer. Okay. Now, before I go to the system, we'll see this. There will be three separate
Now,
tables.
GL to GL transfer means in FICA, whatever GL is there, in FI also same GL will be there.
GL means AR is not involved. In FICA,
Okay.
mostly in subledger, whatever transaction we post, AR is involved. Whatever accounting entry you have seen, AR is involved. Either AR or AP is involved. But if a transaction which has no accounts receivable, accounts payable is involved, that is called GL to GL transaction. So these are all GL to GL transaction. Revenue, deferred revenue, nowhere AR is involved. Okay. So here we'll see three tables. First we'll have DFKK def rev underscore head. This is the header table. Then DFKK def rev underscore trig. This is the accrual table. Sorry, this is the deferral table. And then DFKK underscore def rev pause. This is the accrual table. This is header table. This is like it will give you an overview. So all the items which are uh, already recognized in our example, 60 is recognized. So 60 will lie here in the pause table. Pause means posting. That is how much revenue is recognized. Okay, that is called accrual. And how much revenue is pushed for future recognition will be sent to the trig table. Okay, at the end of 3 months, out of 240, 60 is recognized here. So 60 will lie in the DFKK defray pause table, and 180 is yet to be recognized. This 180 will lie in the trig table. Okay, so with that, let's go to the system and understand this. So first is we have to activate the interface component. So convergent invoicing, basic functions, billable item, classes, maintain billable item classes. So here we have seen two interface components are there. C102 interface. Deferred revenue time based, deferred revenue event based. Okay. Two interface component, it has to be activated. And accrual deferral, I think SAP does not talk about these two. Let me check. Are the other two also needed? Okay, SAP just says that billable item class has the deferred revenue interface component. The order management system delivers the deferred revenues. Okay, it does not talk about the exact deferred revenue interface, but I think the first two are needed. Okay, just a minute. Okay, so it does not talk about which one to be activated. Okay, so I think these two are needed. For these two needs to be activated. So deferred revenue time based, deferred revenue event based. Okay, this is the first configuration. Then go back, we have to activate an invoicing function. So come out of basic functions, go to invoicing process, define invoicing process. In invoicing process 12, we have to activate invoicing function def revenues and deferred revenue by event. Okay, so two deferred revenue and event based deferred revenue. So we learned about one is time based, one is event based. So the two deferred revenues needs to be activated. These two function needs to be activated. Second configuration. Now we'll go to the final configuration. Final configuration is come out of invoicing, and the final configuration lies in FICA. Go to basic functions. Let me find it. Okay, maybe in business transactions. No, this is not deferred revenue postings. Expand it. Deferred revenue posting. Maintain deferred revenue for time-based revenue posting. Maintain account. I'm sorry. Maintain account determination for time-based deferred revenue posting and event-based deferred revenue posting. Okay, so here we assign the GL account. What is my initial revenue account and what will be my deferred revenue account? Okay, so come here and add the config here. So here I have written that if my revenue is 4100 41 series GL, then transfer it to 17. This is the liability balance sheet. One series is the liability. Transfer this to this revenue account. This is in some client they also call it advanced revenue. Okay, so here we mention that for each revenue account, whom where I want to transfer. If I have different revenue account, for each different revenue account, I can use different deferred revenue account. Okay, so for example, say I have one revenue for a device, I am using one revenue. For one time installation, I'm using one revenue account. For the recurrings, I'm using another revenue account. Okay, so like that for each, like for the one time installation, I don't require any deferred revenue account because one time installation is not to be spread over the future months. Or for a device, I also don't want to do deferred revenue because device is also not for device is like a uh, device is handover right away, so there is no concept of advanced revenue. However, the subscription plan that customer pays, that can be handed, that needs to be spread over multiple years. So that's why that period, that revenue needs to be spread. Whatever revenue we use for recurring, that revenue needs to be spread. So against each revenue we have to uh, assign the future the the deferred revenue, that is the liability. Okay, so posting area 1220 we have to configure, which is for time based deferred revenue. And again posting area 1221 or 1222, I guess 1222, this is for event based deferred revenue. Okay, here also we tell the system that against this sales revenue account we will use this deferred revenue account, that is the revenue will be splitted based on this. Okay, these are the these are all the config. I think this is not needed. Okay, here we enter a document type. So when the deferral will happen, so here for these entries, so on the deferral period, when the deferral will happen, the document type we can assign here in this posting area, it is chosen as DF 1221. Three posting area we have to configure: 1220, 1221, 1222. Okay, so this is done. Next we have to do the end user part. For end user part in this environment I cannot do the end user part because here is the thing: for deferred revenue the precondition says billable item class has a deferred revenue interface component which we have activated. The order management system delivers a deferred revenue. Now in this case I don't have a SOM who should deliver it. The SOM should deliver that this payment pertains to a particular period from 1st Jan to 31st December. This information the SOM system or CC system must pass to us, and I don't have any integrated system with me. I don't have any SOM CC, nothing. So in absence of that system, I cannot perform the deferred revenue. So that's why I will use another system, another sandbox. So maybe here you people cannot practice, so I just want to show you how does it happen. If in your project it works, you can validate how is it happening. Okay. So give me some time, let me open the sandbox and I'll show you from the sandbox. Okay, I need VPN connection. Just hold on, let me add it. I hope the VPN works this early morning. Okay. I have logged into a quality system. So here, so I'll first show you the config here. Slash o fqc0 1222. See here, against each revenue GL account, okay, the delayed revenue or deferred revenue is assigned. Okay, so there can be different revenue account, 2 series, 3 series, 4 series, 201, 202, 200, 301, like that, and different revenue GLs. Against each revenue GLs, different deferred revenue GL will be assigned. Okay, so against 01 12 is assigned, against 02, I think the same. First few GLs are same till here, it is same, I guess. Acha. I think one series are having the same revenue GLs. Okay, 101, 102, 103, 104, same revenue GLs. Now for two series, it is 1001, 1001, two series, three series. They are still using 1001, like that. Their chart of account team has given this kind of mapping. So the same way we have configured. Okay. Now first we have to find a bit where the order management system has passed the information. Okay, so slash o fkk
What is alternative GL here? So
alternative GL.
alternate revenue account,
Yeah,
something. Yeah.
we generally do the same GL account here, but I don't know the use of this. Never seen the use of it. Maybe I'll take a look and I'll get back to you on this. Okay,
Okay.
so fkk pix bit underscore mon billable item. So I execute the billable items. Here I'll go to a different layout. Okay. So now you see these billable items here. We have few custom fields. Here in the custom fields, the information are being sent. For example, if I take any bit, say this bit here, I have the revenue recognition from date and revenue recognition to date. Okay. So these information are sent by my CC team. The custom fields, when they send the bits, they send the bits with the custom fields populated, so that using this field we can do the deferred revenue. Okay, in our system we don't have such custom field, I cannot do the deferred revenue. So different from date and to date they have sent. So this looks very futuristic. So this is 2030. Let me find something where we can from date, I'll do ascending. 23 also I don't need. I need an item which has from date is less than today's date, due date is more than today's date. Okay, so 23, 24, this is also 24. It will not work. I have to find something. So closer to 25, still 24. These ones we can use. See this one. Just randomly, I'll take this one. Um, it is from 24/12/05 till 25 01. No, this is also in past. We are in 20. This is 2025 4th of Jan. It will not work. We are not in 4th of Jan. Okay, so let's keep on searching. This one we can do. Okay, so this one is saying that the period start date is 7th of December of 2024, end date is 4th of July 2025. So my from date is below, I mean less than today's date, and to date is more than today's date. Okay, so I can use this. Now here you see both of them are having the same source transaction ID, so they will be clubbed. When I do the billing invoicing, I cannot do billing for one, I have to do billing invoicing for both. Okay, this one and this one together, because they are given same sub transaction. Okay, so first I'll do the billing invoicing, then once I do the invoicing, then the uh, this deferred revenue thing will come into the picture. Okay, so I'll just make a note of the source transaction ID that I'm going to use here. Okay, so first I'll do the billing. What is the bill from date? This environment, go to the right hand side, created on transfer, billed at 7/11 2024. Okay, so I'll use the same date. So select and click on bill, billing process, enter the billing date, which is a bill from date, execute. Okay, billing is done. In the billing, I need the invoice from date. Invoice from date is 7/11. Okay, next I'll do the invoicing. Go back. These are become billed, not invoiced. Then I'll do invoicing. Okay, invoicing is done. We'll take a short break. Please join back in 2 minutes. Then we'll continue with the rest. Thank you.